How do you manage money right now?
You manage money as though things are what the data is telling you. And we keep talking about the fact that there's a recession coming, but every data point you've just given me is positive. GDP is in the fours. I mean, for me, that is just a positive data point. The jobless claims continue to come out, and they're continuing to be positive and surprising you. So we're all focusing on the negatives. Companies are all cautious, and they're almost being told, don't be the optimist in the room. And as an investor, that's when you make money, is that when your opinion and what you're seeing is different than what consensus is.
So where do you make money right now? I mean, what's great about this, and of course the heritage of Franklin Templeton is the basic idea of you've got to choose. Recently, active management's been a challenge. But where is the opportunity given the correlated market I see this morning?
So I would look at our portfolio and say it's actually the most balanced portfolio in Mutual Global Discovery that I have seen since I've been managing it. And so we just have opportunities that exist across the markets. And the benefits from us of being a global manager is I can go shopping in any market. So I can go shopping in Japan and pick up really good quality franchises there. And so that's what we're looking at, is where there's dislocations in the market, and where you've got a U.S. stock that trades at a premium to a good European or a good Japanese company. And so they're the opportunities that we're finding as active managers. But for once in my career, we're not seeing all the opportunities crowded into one sector. We're actually seeing them really dispersed.
How much can you really bank on a corporate model at a time where you have unhinged bond yields and a real uncertainty about what's behind that, given the fact that there are central banks selling, given the fact that there are shifting buyer bases around the world?
It's interesting that, yes, we talk about the central bank selling, but actually the consumer is buying yield. It's the first time that they can look at their money market accounts, and they're making 5% on their money market accounts. They're able to go into the treasury markets and make real yields. So I think that that's where some of the money is going to come from. In terms of looking at those yields thing, you've got to think about it. What are the implications from a company by company basis? And actually, we've been talking for over 20, 30 years how low yields have kept all these uneconomic businesses in business. And so the rising bond yields potentially flushes out some of these companies. And what does that do for the remaining companies? It actually makes them better, and they can gain market share. So it's a good thing, some of these rising bond yields.
So let's get a little bit more specific. Yesterday, Meta came out. They had better than expected earnings. It was a good report. And then on the call, they said, we are very subject to volatility of the macro landscape. The revenue outlook is uncertain for 2024, and the shares tanked. People were looking for reasons to sell. Are you coming in and buying?
Everyone is looking for reasons to sell everything. If you look at the regional banks, a similar type of commentary happened. If there was any type of negative commentary on the fourth quarter NIM, the stocks all tanked as well. So you're exactly right. Everyone keeps looking for these negative data points. But if you stand back and if you were objective and didn't put labels on this, and I was to give you some of that data in terms of what we're seeing on the job market in particular, you would be bullish. I mean, people are employed. Companies are still struggling to find labor. So even though someone like a Meta, has gone through layoffs in the past, probably a little overstaffed and just taking that down to normal. And those comments, though, do put fear into the market that we don't think is supported by the real action of companies.
Well, let's talk about that fear, because the pushback there would be, okay, you have a still robust, a still hot labor market in particular, but you think about what that could mean for the Fed and that last leg to get inflation back to 2%, that they're going to have to tip the economy into a recession to do that. So how are you thinking about that risk and balancing against your portfolio?
I don't think that they need to tip their economy into recession in order for you to get the inflation number down. I think that the first thing we need to recognize is that inflation is really a backward-looking measure, and the Fed has forward-looking models as to where they think the market is going. And so I think that the comments that they're coming out and talking about higher for longer is really informative. They are also not talking about rate cuts, and we are not expecting rate cuts to come. So in terms of the narrative, the Fed is not looking to tip the market into a recession. I think that is the bad case outcome in this situation. I think that they're just trying to make sure the economy's got enough support to kind of get through this and to muddle along.
And Katrina, you said that you could go anywhere right now. You could go to Japan. Are you going international?
Yes. We have increased our weighting in Japan significantly. I think that if you are on the ground in Japan, the essence of what's happening is tangible. You've got the reforms coming out of the stock exchange. We're talking about really simple metrics like price to book, but it's also followed up by a lot of other things in terms of having those dialogues with shareholders that these Japanese companies haven't been doing for so many years, improving their returns on equity, improving their balance sheet structure, getting rid of those cross holdings, buying back stock in the market. So Japanese companies are actually doing what we like to see them, what we like to see a good company do, and I think that's what makes us really optimistic. The cheap valuations, low ROEs, and the really good mindset change.
Katrina Dudley, Bond University, Australia, one of the greatest lights in investment in Australia. I was stunned. I said, Katrina's here. She's not remote from Washington. And then I look at the list last night at the White House. Katrina Dudley was stood up by the president. Rick Springfield was stood up by the president. The damn Veronicas of Brisbane were stood up by the president. Were you stunned you didn't get an invite to the state dinner last night for the Australian royalty?
You know what? I have been here for 25 plus years, so my Australian accent may be strong, but I think, I align so much more with Americans and with my residency status now.
How close, with the tensions in the South Pacific and the South China Sea, how close does Australia and the United States need to be?
Australia and the United States have a long history of partnership, and I do not think Australia is willing to back down from that. The two countries are just so alike in the way that they operate and the way that they see the benefit of capitalism and the way that they value entrepreneurial spirit.